Welcome, everyone, to the Tuesday, September 8th midweek strategy software session. And hopefully not a bunch of gobbledygook from yours truly. My name is Steve Vetterl. I am the CMA of Auvoria Prime, also the risk manager. Try to do things that keeps you out of trouble, making money, and staying on top of the ball. So let's do a quick check, if you would, please. You guys should be able to see the risk disclosure screen. I'll read through that real quick. I should be able to hear me okay. So if somebody could put in, yes, Steve, we hear you, we see you. Cool, thank you. Risk disclosure. Trading the foreign exchange markets carries high risk and may not be suitable for all investors. Trading on margin to utilizing leverage can carry an even higher level of risk that can lead to complete loss of investment funds. Do remember that statement. Before deciding to trade foreign exchange or any markets to trade, I don't care if it's options, equities, mutual funds, you should carefully consider investment objectives, levels of experience, risk tolerance. Most importantly, can you afford to lose the money, and will it have a significant impact, if at all, on your psychology? Because we don't want you losing sleep and getting gray hair and developing cortisol and all those problems that come with stress, right? So Auvoria is nothing that is essentially presented on any of the calls from any of us, whether it be myself, Cameron, Susan, any of the other presenters. They're all none of it's company recommended settings. So with Alexander Iris Einstein, we're the ones that are essentially just suggesting settings. These aren't necessarily recommendations. So AP is not a financial advisory firm. They don't have any recommended settings. They just license software. It comes out of the box with default settings. You can make changes to it and be able to customize that however you want. But do understand what you're doing, as I always suggest you a demo account first. So we have nothing to do with the customer's brokered account. We don't solicit or take investments. We don't manage money. We don't recommend any brokers. Trust me, there's plenty of them that's good. If you ask enough and you're up and downline, you will find a good broker. But we're just licensing software and selling really good education, which is being translated into lots of languages, and that's great to see. So the Q&A window is open. Let's switch over to Forex calendar. Now, we've had a few events develop, as many of you may have noticed. Here is the Forex calendar. Now I'm showing you the whole calendar because I got some questions last week on how to filter this out. Just click on this little filter button. And if you want, get rid of the orange, get rid of the yellow. Low impact stuff does not matter to me. Yesterday was a holiday. For those of you overseas, it was our Labor Day, big holiday. I was away, didn't get a chance to really pay too much attention yesterday what's going on in the Forex until I came in this morning. This essentially is what is going on in Forex this morning. So we have some sniffs, if you will, some whiffs that, and I'll show you this on a different chart, but I like looking at everything in a one screen dashboard, if you will, and that's what FinViz provides here. But just looking to see, we had a pretty big move in GBP USD. Why is it getting weaker when the US dollar's been the one getting weaker? This morning it's actually been getting stronger the last 2 days. But I think the market's gotten a whiff that just some problems with Brexit. So again, no surprise for any of you that's been with us for some period of time, this particular situation in Europe, whether they will and in fact leave the EU, will they have the right trade deals in place, it's been a real problem. It's been romper room, if you guys remember what the hell that is from the old days. So it's just a crazy room of kids throwing stuff around and nobody can get anything straight. So that's kind of what's been going on with this market. So I would imagine, I haven't peeked in, we're going to do it together this morning. I haven't peeked into our alternate account. Hopefully it's not getting completely beaten up by this move. But we'll go ahead and take a deeper look at that. So that's what's going on there. Take a look at the world currency markets. As you can see here, I prefer to look at them in the aggregate. I can see what's being correlated to sell-offs. Some pretty big sell-offs in oil. It's almost been a risk off play over the last 2 days. That means that equities and some commodities have been sold, some cases in mass. Surprisingly enough, gold's actually holding up quite well, as it is a store of what some believe to be tremendous value in a meltdown situation in other markets. Okay, so you can see what's going on with gold. Still holding firm right under. And I think this is important because this is kind of beginning to be a little bit of a tail wagger for the US dollar, where it was the reverse. We've gone into a pretty big flag pattern here on gold and may pop to the upside. That's obviously what all the gold bugs are looking for. So let's jump over to TradingView. Just take a quick look. Got a lot of questions, believe it or not, on equities, and you guys run 401ks and some pretty big accounts out there. This is a big area of support right here. It's huge. Okay, it's the biggest of the whole stinking summer in the S&P 500. So if we hold this level, there is an argument to do some short-term buying for potential rally into the end of the year. I can't say that for sure, because I can tell you that there's just been a tremendous amount of options purchasing by retail investors, such a lopsided amount of bets on the upside of this market, that the markets, in any markets, real goal is when things get really lopsided, they're going to go terrorize wherever the masses are in terms of the position size. So let me just get rid of this screen here. All right. So let's go into GBP USD. So this is the big area of support right in this 30-33 area. Arguably could be a little bit lower as well, but it's holding off of that so far. Again, as I mentioned on Saturday and earlier last week, this big reversal here, somewhat US dollar related, has pulled us back. I would have expected, as I mentioned then, this to go back down and visit the other area. So what does this mean for anybody trading Einstein or Alexander? Well, the more I get into this, the more I'm talking about technical analysis, which is part of forecasting. It's a very big part, is learning how to read what's going on globally and making assumptions on what one should do inside the signals that they get from Alexander, right? So in this particular case, had I actually been trading Alexander, which I don't have the time to do, I wish I did, I would not have accepted a lot of longs on this way down, just because I knew we were probably going to go back down and visit the other area. It's that simple. So I would have accepted a lot of shorts as we had pulled back and rallied into what is arguably a very tight trend down channel right here that's building. Okay. Now, I think that since we maybe have bounced off the bottom, could be wrong, right? Can always be wrong. That it would be okay to be accepting some longs down here and shorts, at least for a period of time. We started to break this line. All bets are off as far as that advice. Let's take a look at Euro USD. Same thing. Had that reversal up there. This is when the dollar started rallying, came back down. I expect us to visit the 17 area at some point. When, how long, I don't know. I don't have a crystal ball. Let's take a look at the US dollar. So I can almost draw the upper channel right here where this dotted line is. That's going to be our essentially point of reference as far as potentially staying within this small tight balance area between essentially 92 and 94. We break above this, we're probably going up here. And it's going to take some time essentially for my potential. Let's switch this over to a monthly chart on the US dollar. Ideally, I think that we're going to be headed down somewhere into the 85 area at some point. Could be wrong, could be delayed. We may start going back up again, which I think would surprise most of us from an institutional forecasting trading standpoint, because we were expecting at least this to get out and test the 200, which is what this green line is here. So what does all this mean? So I teach this in genuine hopes that you'll start to catch on to some of this, and you'll want to take a look at the charts yourself and make assumptions on what movements have happened. It'll help one feel more comfortable about a number of things. One, understanding how the software trades, and so forth. Okay. So with the questions, you guys feel free to open up and ask. The question I cannot answer because I am not smarter than the software is, hey, Steve, I'm in drawdown. What do I do? Well, the first thing, because I get this question literally every week, right? So it's almost like nobody cares everything else I'm saying. They just want to know, hey, Steve, I'm in drawdown. What do I do? And the answer always is if you're trading Alexander, you have the flexibility to not take trades, right? So by all means, if you're not quite sure what you're taking, don't accept any trades if you're in drawdown. But the problem with that advice is that what if I'm wrong and you should have accepted those trades and would have helped you get out of drawdown, right? Now, in the case of Euro USD, I show this chart most rightly up front because of the simple fact that, let's drop back to a day. This is where 30% of the volume goes into foreign exchange currency trading. It's just primary pair. It's the main pair out there, period. You have the dollar, DXY. There's different amalgamations that this trades in, different types of forms this can trade in. But essentially, with the Euro USD, this is the only currency pair other than the 6E, which is the CME futures traded contract that mimics this. In Forex land, this is the primary currency to trade. So I want you guys at the very minimum to not necessarily force or feel any undue pressure to become a chartist, right? Or technical analysis, but I want you to at least understand the basic movements of these patterns because it will help you feel much more comfortable down the road. You know, we can only talk about news events so much, right? There are some out there that want to trade through news events. There are other pieces of software coming out, obviously. If you guys have not seen any of those software presentations, I would highly suggest that you watch the Telegram channels of the main corporate or go back into the dashboard inside the back office and watch all the introductions to the 4 pieces of software coming out. One of them is called Variable. It's probably going to be released before any of the others. It's done exceptionally well. So I'll show you a little bit of it from a different perspective just to give you a taste. But let's just see if we've got everything covered here before I jump into that. Not doing a lot of technical analysis on Euro JPY. I see the question on that. We've been in a real tight range. I think the US dollar for now is going to be moving around the euro, which will be moving around the yen. So it's sort of a tertiary play, if you will, sort of like what I call a pin action play. So you really have to pay attention to what's going on with the euro first and foremost to see what may be leading around this particular pair. Hasn't done all that great in statistics and a lot of the trading systems for the different software. Now, USD JPY, again, real tight, real tight formations here. I think it's just waiting for something to happen in a grander scale in terms of US dollar. Maybe some of the volatility we saw back when the pandemic was breaking and central banks were becoming super accommodative. But for right now, there's really just not a lot going on. Obviously, the 105 area, first line of defense as far as the shorts and or bulls protecting these positions, institutional investors down at that level. So GBP NZD, for anybody who wants to see it, I think at some point we're going to find the perfect settings and or the perfect EA algo to trade this monster. This is one of those wild rodeos that I really have built a genuine desire over this summer to try and tame. I could be dead wrong in my assumptions, but I would love to be able to try and trade this more. I still haven't seen enough definitive advice. All I've seen is this thing blowing out accounts that ran exceptionally well. So, what else do I want to All right, so let's take a look. Anything to note? This is a Forex calendar if you haven't seen it. Do keep in mind that this EZB press conference could certainly be fraught with some more significant risk, just given the current climate we're in of, hey, are they moving out of the European Union? Or are the British people going to have the right trade deals in place? These are real problems when it comes to currency devaluations and appreciations for that matter. I think the strength of this currency has mostly just obviously been on U.S. dollar weakness. But I think in the case of the UK, it really has been maybe them truly trying to get their act together to leave the European Union, which I applaud them for. All right, so I do not have the US 30 settings. So I don't know. Did I mention I would have them Tuesday? Did I say that and I forgot? Was I being a bonehead and I don't have the settings? I forget. Somebody wants to remind me that they can. I will actually. You know what? Let me just make a note to the developers right now. I need the US 30 settings. There we go. So I'll get those for you guys. I just shot a Telegram note out. That's all I really want to say on a lot of that. Let's take a quick look inside the accounts. For those of you paying attention to the big denominated Euro account, we have running Einstein 1.01 per 3K as far as the lot size. We took some profit out of this account, as you may have seen, $1,000. Account's done well. It's up 1.4% so far this month. I noticed a slight improvement in the win rates. Now, in all fairness, the account is in, it's taking some heat right now with some trades that are, it's in drawdown arm. But as we've increased the pips on this, so we're not taking stop outs on stuff we think we have a chance of turning around. But all in all, I can't really complain about the movement of this account. It's been able to really dig itself out in the face of some crazy adversity, albeit it isn't really setting the world on fire. Let's take a quick peek at the alternate account. Okay, so this is the GBP USD. This one's taken probably looks like it's taking about a $1,200 drawdown in this thing, so it's certainly getting beaten up here. That's for sure. Something like there's a lot of NZD related stuff. Yeah, so it's taking some hits on these CADs. Still hasn't sold them though. Sending the hopes this thing can pull out. This is the beauty for all you guys out there that are in Alexanderland. You just learn learn some of this stuff technically analysis wise, and you really can have a significant advantage in not taking certain trades that the software probably should have been taken in the Einstein mode. Maybe I should be more active with this account. I just don't have the time. Let's take a look at 3K high volatility settings account. Those of you that have been paying attention to this account, all of these links are on my Telegram channel. And this is the first time I've been looking at these accounts. We're going all together live, real time. So we got about a $300 drawdown here. And one of the questions I got the other day I didn't get a chance to answer was about the drawdown percentage. If you want, you can actually switch this to profit. Then it'll show you what your worst hits were that it took. Okay, so you can see this one, August 11th, $563 in hits. You can also look at it in a PIPIC form as well. Total not traded. Win rates are still staying pretty high, so I think if it could successfully pull itself out of some of this drawdown, I think we'd pretty much be near break even, which seems like a stinky place to be in for having traded this thing since June. But this is a great example of how some pretty decent hits in terms of percentages. I'll show you here. in the drawdown stuff have sort of came out or gotten themselves out. It's taken some time. Arguably, I guess certainly some people may not have the patience for this. This is why we have the high volatility settings. As I told many of you on Saturday, I actually have some data coming out. We're looking to make an adjustment on some new accounts to some different settings. Okay. So we're going to talk about that on Saturday as well. We have a couple of guests coming on if we can get them confirmed. These are the settings for one of the questions I just got. All right, so let me answer a couple of questions before I do that. Yeah, so the US 30 settings and the questions I just got off, I sent off a note to a number of the pros that run those settings. I'll tell you this, I have some fairly decent data on that. But one thing I will tell you is that I haven't looked at those settings to any large degree. So I will take a closer look so I can sort of rule on whether I think they're worth a crap or not. But here are the current settings for, let's switch actually into the other account. So this is our main account. This is the high volatility settings for the question I just got. We're running a trailing equity. Now we may be switching that to a fixed weekly goal on Saturday. I'm not sure. I may just set up a demo and allow this to just run in its continued live form. This account's almost dug itself out, which is cool. Fortunately, it's taken a whole damn summer to do. Okay, so, and by the way, guys, ask the questions in the Q&A window. So here's one that's in the chat window. It says, when in drawdown with Einstein, I shut it down and manually I do scalp the last level in the money. The problem with that advice, Luke, is that the vast majority of our subscribers don't even know what that is. So the tough part about this is that if I think I'm smarter than the software and I turn it off in any form, shutting off sequences, different trade levels it's taking, I'm basically saying I'm smarter than the software. And I've seen countless times where that week that it was off, I would have made money. So it would have helped me pull out a drawdown. So it's a difficult thing for me to be able to say. Now with some of the other software coming out with, it seems like it's taking forever, right? Me, I'm impatient too. We have a huge downline of people we haven't brought in, by the way, that we're just kind of on hold because we want them to come in, get the onboarding live, and then go through the variable startup, because it's just an absolutely sensational story to tell. And for a couple of the questions I got surrounding that, here's your teaser for you guys sticking around so long today. So this is variable in a different format, MyFX book, okay? So this is a demo, it's a verified account, it's been running since May. So what has this account done that's different than the longer term one I showed you? This account's actually scaling up, okay? So with some of these returns, which have been bananas in my opinion since May, they are taking advantage, in this particular individual who runs this account's case, they're taking advantage of a larger than 0.01 lot size. Does that make sense? If you guys have any questions related to that, let me know. But this is outstanding returns. Now, again, as I try to warn everybody and everybody that's listening to this recording, if you guys walk around to your groups or the people you're trying to bring into your up or down line, and you talk about nothing but this, and this is all you're selling, you're doing your group a big disservice, because there's going to come a time when different folks inside your group are going to come in and maybe the market will have a bad month, right? Although it doesn't seem like there's been any bad months in variable, which is a pretty formidable track record to brag about, because we've been through some hellish times, much more hellish in my opinion in the last decade, with the exception of the financial crisis in, latter parts of 08 through the first quarter of 09 and the central banks, and globally everything was just It was the first time they'd ever brought about a quantitative easing in mass. It had huge implications to the currency markets. Is shooting equities way down, and then way up. The same thing happened in the currency markets, but this is the first time in over a decade that we've had this kind of volatility over the last year, and this has done excellent. So take a look at this drawdown. So here it is in actual percentage form. Remember, these are drawdowns, even though it looks like these bars are going up. And then if we switch it to profit, which sometimes makes it easier to understand, it's taken some hits. It's also had some huge runs too, and just sailed on a few trades. So just be careful when you're talking about this, even though it's done great. These are the pairs that are currently open trades on. Summary on this, these are the pairs, a little bit different group of pairs than Dasan, the developer's running, okay? So notice what's going on here, but again, most of the stuff in terms of profit is overwhelmingly Euro USD. Even if we switch over to Dasan's MyFX book, right? Take a look at the summary. Okay. Overwhelming profit, not by a long stretch on this one because this is a longer track record. Euro USD. So GBP, here. So one thing also to note is this is a great example of what would initially appear to not be a great win rate, okay? But if you have tight risk management in place, you can have win rates of 51, 52, 53%, right around that. You can even have it a lot lower and still make money. Doesn't have to be in the 60s, 70s, 80s, or 100s, right? Some of the win rates, some of the software that we've just started tracking is up in the high 80s and 90s, which is great. But if you don't have the risk management in the software and you're taking way too large position size for these trades, this whole track record could completely get wiped out, as we've seen in a lot of our demo testing for different pieces of software when we had arguably some of the wrong settings. Because I came in green to this group, even having almost 20 years of trading experience, and about 10 of that in the futures markets. I still had never seen a deep dive on a lot of these EAs on the MT4 platform. So we use different platforms, the institutional side, but really beginning to love the MT4 and a lot of these EAs because I've come across, and hell, I'm looking forward to the day where I don't really have to do a lot of manual trading. We just let these EAs handle, a huge chunk of this, and heck, at some point, some of my bigger clients' accounts, which we're looking forward to. So for now, it's done well. Risk has been tight. Yes, there are a fair amount of trades that have been taken, but you see over the course of, heck, we're almost coming up on, I guess 11 months at this point of a live record. It's taken 3,000 trades. Okay. But the commission hasn't been that bad. Right? I know it seems like it's nuts, right? But look what happened. I mean, you spend a G, roughly, to make $11,000. Pretty great stuff, guys. So if you look at the returns, running here. And the thing that just blows me away about these numbers, the lot size has never been changed. It's still 0.01. Seems like it should have been dialed up, but it hasn't. So you can see how that lot size made a more dramatic impact, right? Because the account was much smaller. But now that the account's gotten much bigger, the returns have been lower because it's still a small, weeny lot size. So lot size, ideally, in this particular case, starting lot size, should not be 0.01 for an account this size. It should be between 0.03 to 4, in which case these trades would be a lot larger. Also, would be another higher potential for drawdown. So there's arguments because in its current form, what you're looking at is an ultra conservative setup, 0.01 per 10K, right? Or technically 0.01 per 12K. You know, even on our most ultra conservative accounts on the other side, all the settings I'll work with a lot of the directors and developers to hone down and fine tune these settings. They're still 0.03 per, I'm sorry, 0.01 per 3K. That makes sense. All right. So, what else do I want to share? So don't run around and just talk about numbers. Talk about how this can empower your team. Talk about how this financially can impact their life. But there's going to be setbacks, and I think it's important you guys address that. And the more educated one is, and the more diversified the software mix and or your portfolio is, the more you have the ability to take the hits that I almost guarantee you are going to be presented by the marketplace. You know, I've seen, and do keep this in mind, I've seen those. I can't say I fit into that mold, but as Cameron Kirkar, who hosts the Sunday software calibration, he has spent an inordinate amount of time fine-tuning Einstein. It's taken a lot of time. I get it. A lot of you don't have the time to do some of the things that Cam's going to talk about, but I still think it behooves you from a calibration standpoint to be able to pay attention there, because again, it's just going to continue to build that risk knowledge, right? It's going to continue to better understanding how the software operates. And you may say at some point, hey, you know, I want to maybe do some Alexander and take some trades, maybe not take some trades, you know, depending on where the market's going, what currency I'm trading. I want to have variable running a chunk of my portfolio as well. I think that's a wise move. Maybe you want to have, you know, Stratamus or Gearbox or some of the other EAs that are coming out running other chunks of it. And I get it's going to be more in subscription cost, but the point is that, you know, if some of these can pop off anywhere between 2, 3, 10% a month, once you start building those types of returns over time, it's going to start to really just like turn into a big old snowball, and you won't be complaining as much about the monthly software costs, you know, unless you go out and find 3 people, which is really the best way to do it. Anyway, all right, so let me take a look at a couple of questions here. So you're going to begin at active software and the trade. Yes, I will take a look at that, Alex, getting his US 30 settings. About the new EAs, any chance we would be getting some lot sizes? And yeah, so everything is going to be all broken down by the developers. They're all going to have that in terms of breakdowns. None of the other, with the exception of Gearbox. Okay, now Tyler's going to completely run all that. I'm not going to be getting too much into Gearbox. I will just default to Tyler's webinars for that stuff, guys. Okay, when Gearbox is ready, we're not quite ready with the release of it yet, but when we do get closer to that, what I'm trying to more move into the role of is just talking about how Forex and the different monetary markets are working, try and give you guys just a real light touch of technical analysis so that I can keep you somewhat in the mix, and hopefully keep you safe on some of these crazy currency moves. This is the US 30, by the way. Okay. So here's the Dow Jones Industrial Average for that question. So take a close look at the screen if you want to see it. Okay. Remember, we were peaking up around 29,000. Now we've dropped below that all-time high. And then the US 30 is the currency index for the Dow Jones. And remember, this is 30 stocks that are size weighted, not capitalization weighted. Okay, so it's a very inefficient index, in my opinion, from the standpoint of really giving you a broad perspective of what's going on as far as U.S. equities. It's just not a great representation. The ES, which is the futures right here, obviously for the S&P contract, as well as the SPX itself, is a much better capitalization-weighted representation of 500 equities in this country. All right. The Gearbox is not ready. I can tell you Gearbox is going to have different types of settings. Gearbox is more involved. Okay, so you're going to want to, and these guys are spending an inordinate amount of time in development which is good. But there's a lot of things that got to be straightened out. I hope the release can be real soon. I really do. But it's like building your own model. Okay, so you may buy, and I always use the F1 examples, right? You may buy a car that's completely finished and ready to rip around the track. But if you don't know what you're doing, you get in a car, you go too fast, you crash into some corners, you may win a race and then get cocky. It's kind of what's going on for some with Alexander and Einstein, right? Whereas Gearbox, they've taken everything apart in that F1 car and they've determined, well, maybe the engine's a problem during this turn, and maybe we can switch to these gears and be less risky here. And overall, it's going to give you a much smoother race around the track, but it's going to require more fine tuning and eventually we'll have the settings totally dialed in, so you guys won't have to put that kind of effort into it. Does that make sense? So maybe a somewhat crappy analogy right now, but I got to stick on my theme of F1 analogies, right? All right, so what else? That's a tough question. Right now, Anonymous, if you could only afford one license, I would put it on variable. And then I would go find 3 people, and then I'd get another license. Does that make sense? That's kind of what I would do. So, and by the way, I'll tell you guys, I know it may be a little more difficult in the past with Einstein and Alexander and all the volatility we've had. So, for all the team at Auvoria, I appreciate you guys sort of sticking with us. I know you're going to have probably a bunch of subscribers that have sort of unsubscribed for a period of time. But as soon as Variable gets released, I would absolutely go back to everybody that could afford it and say, take a look at our new version 2. Or take a look at Cam's course on Saturday. I'm sorry, it's on Sunday, where he's really doing a deep dive into the settings. He's going to show you ultra conservative stuff and all kinds of different settings from what I have. We're going to show you different settings on Saturday, but ideally, maybe the next couple of months, we've got 3 softwares out, maybe 2. 2 of them are exceptionally dialed in. One of them, like Variable, is more, you really can't change the settings, if that answers your question. So you're going to be just, the software is, and I will never use the term on autopilot, and please nobody talk about that, the set it and forget it autopilot thing, because again, I think if you're training your up and down lines very poorly, if you're moving into that discussion, you've got to talk about risk. Because I'll tell you, everybody that was touting the fabulousness of Einstein and Alexander, and I'll tell you, it did do well last year. But that martingale has just been brutal this year as far as getting and just digging a hole that's just too big to get out of. And for those that live by the sword of performance, have died by the sword. Okay, it's the same thing as a financial advisor. Even though some clients that are new have gotten a whiff of how I've done for other clients, and it's been stellar in some cases, past performance is no indication of the future. What if I turn into just the shittiest trader the next 6 months for all my clients? I don't get any decent performance. What if I just make a lot of bonehead moves? So it's all about just understanding risk and keeping your ego in check. Because as all of the S&P 500 option holders that have bought a ridiculous amount of put options over the last 4 or 5 days will tell you, they've completely gotten their ass handed to them. And just an over groundswell of volume in that. So what do the institutions do when they see that? They just start shorting it. So you're just going to get plowed over. And it just continues to happen. It's really kind of sad to see, because a lot of people will take some of their hard-earned money and take a couple of options classes. It's just exceedingly difficult to trade, and I do not recommend it. I don't even trade it myself, right? I hate the options market. A lot of people are like, you're always best as a writer, and there's all kinds of softwares out there that let you understand gammas and deltas and thetas and all the other Greeks that go along with understanding quantitative analysis and options trading, but it is just a ridiculous amount of work to make some money. Whereas you can just get into futures and forex markets not have to put anywhere near that kind of effort out, or wake up the next day with a significantly devalued portfolio because the time value killed it, right? It's just a much better area to get in. So for those 2 questions from the anonymous on options, that is a big reason I stay out of that area of the market. Anyway, if anybody else doesn't have any questions, about 42 after the hour, I got to take off. Got a client meeting coming up here at noon time. So anybody has anything additional, if you do want to send me an email, it's steve at, wait a minute, that's not true. It's svederal@auvoriaprime.com. Please send me your MyFX book, which I think is critical. Everybody should have that set up. Certainly on a live account. I highly recommend for a demo. Send me your link. I know it's been kind of a pain in the ass, guys, to get these damn things verified these days, which I still have not been able to do. I am feeling tech challenged when it comes to that. But send that to me. Send me a snapshot of your settings. Hopefully this is money you can afford to lose, right? That's the important thing to understand, because you could lose it even with some of the other softwares, and for that matter, in any type of investing that's out there. So I'll bid everybody a good day. Be safe this week. I will see everybody on Saturday. Hopefully my 2 guests don't flake on me. Take care.